Today, we're talking about a high-stakes game that's playing out right now, the game for control over your entire digital financial life.
So who's going to decide the future of your money and your identity? Well, the answer might not be who you think. We've got three huge players making moves right now that are going to shape pretty much everything, from how you budget your money to how you prove you are who you say you are.
Yep, we're talking about a mega bank, a tech giant, and Wall Street deal makers. Specifically, JP Chase, Apple, and the world of private equity. We're going to dive deep into the strategic plays each of them is making, what they're up to, and, this is the important part, why it all matters to you. Okay, so first up, JP Chase. We're going to look at this fundamental battle they're in the middle of, and it's all about a simple question. Who should have to pay for access to your financial data? So this gets into the whole idea of open banking. And really, the concept is super simple. It's built on the principle that, hey, it's your data. So you should be able to securely link your bank account to, a budgeting app or an investment platform, really any service you want to use. And it should just work.
And this CNBC headline, man, it just perfectly captures the whole conflict, right? JP Chase wins fight with fintech firms over fees to access customer data. Basically, Chase, being one of the biggest banks on the planet, just decided, you know what? From now on, third-party apps are going to have to pay us for the privilege of accessing our customers' data.
And look, they didn't just ask nicely. This was a straight-up power play. Chase used its massive market power to just force the issue. They went out and struck deals with the big data aggregators. We're talking Plaid, Yodlee, the major players. And now they're collecting fees on over 95% of all the data requests hitting their systems. And the best part? A Chase spokesperson, in what has to be a masterclass of corporate speak, just called it the free market working. Wow. So while all of this is going down, you've got the regulators absolutely scrambling to catch up. The Consumer Financial Protection Bureau, the CFPB, is trying to write the official rulebook for open banking. But here's the kicker. They're trying to do it on this incredibly rushed timeline. You see, normally making a huge rule like this is a long, deliberate process. You can see all the steps here. You've got notices, public feedback, reviews with small businesses, more comments. The whole thing is designed to be super thorough. It usually takes like 18 to 24 months. But the CFPB? They're trying to cram all of that into just a few weeks. And by skipping some of these really crucial steps, yeah, they're moving fast, but it basically guarantees that whatever final rule they publish is going to get hit with some serious legal challenges, and those challenges might actually work. So here's why this really matters. The bottom line is Chase was big enough to set a brand new precedent. The biggest banks can now demand to get paid for data access, but your local community bank, they just don't have that kind of leverage. So this whole move just reinforces the power of the giants. And you have to wonder, right? It could end up stifling competition and real innovation in the long run. All right, let's switch gears to our next major player, Apple. They're making a much quieter, but maybe even more significant play. A play to become the official keeper of your digital identity. So you might have seen this. Apple recently rolled out a new feature that lets you create a digital ID right from your US passport. And honestly, the process is pretty slick. You just take a photo of your passport, use your phone to scan the little NFC chip that's embedded in it, and then you do a quick liveness check with the camera. Move your head around just to prove it's actually you. Now, if this whole slow rollout strategy feels familiar, it should. It's exactly like how they launched Apple Pay. Remember that? It wasn't some overnight sensation. It was a slow, steady, year-after-year grind to get merchants and customers on board. And that's the point. Apple is absolutely playing the long game here too. But, and this is a huge but, Apple is facing a totally different challenge this time around. See, with Apple Pay, they could lean on a pretty centralized industry. They just had to deal with Visa and MasterCard, basically. The world of identity, though, it's a mess. It's incredibly fragmented. And think about it. The stakes for you, the user, are so much higher. If Apple Pay glitches, okay, your payment gets declined. Annoying, but that's it. If your digital ID fails, you could be denied entry somewhere. Or, way worse. So yeah, the road ahead is really, really tough for them. First, they've got to convince dozens of individual state governments to get on board. Then they have to fight off a ton of competition from folks like Google and Clear. And maybe the biggest hurdle of all is just convincing us to trust it. Think about it. Are you really ready to rely completely on your phone to prove who you are in a high-stakes situation? So the big takeaway here is that the race to own the one true source of your digital identity, it's officially on.
And whoever wins this race could become the central gatekeeper for just about everything you do, both online and in the real world. And Apple is very patiently, very deliberately positioning itself to be that gatekeeper.
Okay, and that brings us to our final power player, Wall Street. Specifically, we're going to look at the recent sale of a fintech pioneer, Greendot, because what happened to them tells us a lot about where the smart money is going. So let's just rewind the clock a bit, back to 2010. Greendot, which was a true original in the fintech world, goes public. And at the time, it's valued at almost $1.8 billion. I mean, it was a massive success story. Fast forward to today, it's being acquired in a deal that values the company at about $1 billion. Now, not only is that substantially less than its IPO price, but that's before you even factor in almost 15 years of inflation. It's a huge drop in real value. Okay, so check out the clever part of this deal. The new private equity owners are actually splitting Greendot in two. One piece is the tech platform, the fintech part, and the other piece is the actual chartered bank. But here's the twist. Even though they're now separate companies on paper, they have a deal where they have to work exclusively with each other. It's this fancy corporate maneuver to split the company up without really splitting it up. So you gotta ask, why goes for all that trouble? Well, it sends a really strong signal that the public stock market just doesn't know how to value a hybrid company like this, one that's both a regulated bank and a nimble tech platform. Investors just get confused. So by taking it private and splitting it up like this, Wall Street is betting that they can unlock more value by selling the pieces to specialized buyers later on. And what that really suggests is that this kind of innovative model might have a really tough time surviving under the bright lights and scrutiny of the public markets. Okay, so let's pull the camera back now and connect the dots, because these three stories might seem separate, but they are absolutely pieces of a much, much bigger puzzle. What we're really seeing here is a huge consolidation of power. You've got Chase, the mega bank, basically setting the rules and the prices for our financial data. You've got Apple, the tech giant, patiently building the entire infrastructure to become the gatekeeper of our identity. And then you have Wall Street, through private equity, quietly reshaping the whole fintech landscape completely out of public view. Look, each of these power players is becoming a new kind of gatekeeper for our digital lives. And as finance and technology keep crashing into each other, it leaves us with a really fundamental question to think about. When it comes down to your money, your data, and your very identity, who do you actually trust?